Good morning, traders. This is Blake Morrow, and you are listening to the
The broadcast is now starting. All attendees are in listen-only mode.
just making sure that we're all getting started. Let's see here. Steve, can you hear me?
I can hear you, Blake. I'm here.
All right, I'm going to take over. I don't know what flipped over to Steve's screen. I was going to take over, but I'm going to take over right now. Thanks, Stelios. I'm glad you can hear me. All right, so good morning, traders. This is Blake Morrow. You were listening to the face webinar that was Stelios Contagoulas, and Steve's going to be joining me also as well, or joining us here shortly. And Dale's not feeling well today, so when you guys get an opportunity and you get a chance to talk to him next, or you can send him a nice little tweet. He is just not feeling good today, so we're the three of us are going to take over and go into the markets and go into the majors. So it's been a really
Blake. Good morning,
Yes.
mate. There is a good chance that Gregor is also going to be with us at the last part of the webinar.
Great. Okay, thanks. I forget what I was saying.
Sorry, that's my fault.
It's been a really slow night overnight, and so there hasn't been a lot of activity. And so what I'm actually looking at is obviously a lot of consolidation, but what we're paying attention to, and what I'm going to be paying attention to, is the Canadian. Obviously, we have after yesterday, we have the Canadian retail sales produced a move that took us to the 127% extension, and we came off, and that was also the 200-day moving average. So this is a really, if you guys are watching the Canadian closely, this is a really critical trend line resistance that we've penetrated, but we're at the 200-day. It's a very it's kind of an iffy area for the pair. I could see it going either direction. It could be a spectacular failure here, and could roll over and reject the 200-day moving average, have a false breakout of this trend line, and come back down. Especially if CPI data comes in a little hotter than expected today. But the flip side to that is that we could actually get a really massive breakout, and frankly, like I said, I could see either or. But the one thing that I have to note is that the euro dollar, as big of a bounce as we saw yesterday, there's been no follow through. So matter of fact, we're trading pretty heavy right now, meaning the dollar is a little bit firmer than I would have thought that we would have been today. I thought that the dollar would have been, on its back foot, and the euro would have been well over 124. That's what I thought I was going to wake up to this morning. And so waking up, looking at the euro dollar, and it's just trading around 123, I was very surprised. So with that being said, I'm a little skeptical about dollar weakness in the morning. And I sent out a tweet a little bit ago about the US dollar Swedish krona. The US dollar Swedish krona is one of those currencies that I don't necessarily trade all the time. I trade it from time to time, but it's not one that I trade religiously. But it is one currency that I like to have going in the same direction that I'm trading. So what I mean by that is if I'm like, if I was short the dollar, I'm just going to give you an example, which I'm not, but I'm not short the dollar, but let's just say I was, and meaning I was long the euro dollar. Okay, so let's say I went home long the euro dollar overnight because I did feel that the euro is going to go above 124, and I decided to take a position. If I was short the dollar and I saw the US dollar Swedish krona breaking higher like it is, I would not be comfortable with that. I always like to have, not always, I mean, obviously there's special occasions and there's certain situations where, if it's Swedish data that's moving the market, or, maybe European data that's really moving the market, it might might be different. But under a normal circumstance, when there's no like data that's actually moving the specific currencies, if I was long the euro and short the dollar, but I saw the dollar Swedish krona breaking higher like this, it would freak me out. It would really make me second guess what I'm doing. And that is exactly why I put out that tweet this morning, because we're seeing this relative strength come through the US dollar Swedish krona. And it's, even though, Swedish economy is not the bellwether of the market, sometimes it is kind of a leading indicator at times for me when I'm trading FX. And so when I'm seeing this morning and I'm looking at the euro trading really weak, my opinion of the euro could be that we take out this support. Now I'm going to draw what I had drawn yesterday, and then I redrew things yesterday. So originally I had this trend line like this, okay, and this is what it originally looked like. It looked just like this. All right. This is going into yesterday. So I'm just going to, let me get rid of this fib level for a moment. I can redraw that here in a moment. Okay. So I had the euro dollar looking like this. Nice little trend line, very, very, very well mannered. Yesterday morning, we broke through that support, and I'm like, oh, the euro dollar is breaking down. And then we had this violent whip higher, and I'm like, oh, maybe that was a false breakdown. Okay, maybe, just maybe, I just didn't draw it correctly, which, I adjust trend lines all the time. I mean, unfortunately, when you're trading the markets, you kind of got to make adjustments on the fly a lot of times, because the way you see something is not necessarily the way the market's going to see it. So, I'm like, okay, well, maybe I just didn't draw it correctly. And maybe we have like a kind of a loose, channel that looks something like that, or, maybe something that looks like this, or whatever the case may be. Well, that's great. And that's why coming into yesterday, I was thinking, okay, well, the euro dollar is probably going to be trading above 124 when I get up, and then I'll figure out what to do with it after that. Well, it's weak, and the euro dollar is barely hanging on to 123, which, then I start looking at the US dollar Swedish krona, pretty strong. It makes me think that the euro dollar risk right now is a break lower. Now, I'm going to give you guys the same argument that I had from yesterday. The same argument being that the market is extremely long euros, and I believe position wise, from a institutional level, is still very long euros. And I believe that most people, myself included, feel that the euro dollar is going much higher over the course of the next, 12 to 24 months. So in other words, I think the euro is going to 130, maybe 132, maybe back up to the 140s. Who knows? But I do think the euro is going higher. I think and institutions are positioned very long the euro right now, which is a risk for the euro dollar in the near term, because if you bought the euro last year in the 117, 118, 119 level, at the end of last year, you're not really too worried about the euro, because you're positioned accordingly. You're like, well, if it slips back down to 120, 121, I'll just buy some more. But if you bought it at 122, 123, 124, you're probably positioned poorly, and you are susceptible to getting stopped out, or probably reducing some position size, saying, hey, I'll buy some more when it gets to 122, but if it breaks below 120, 122.50, I'm going to have to get rid of some, just so I don't have a really bad position going into this move. So I think the risks are still lower in the euro dollar. I think the risks are for still near term. And watching the price action this morning, it's trading pretty heavy. All right. So and then again throwing on the rally in the U.S. dollar Swedish krona sure doesn't make me feel good. Now, and that's all I wanted to say about the euro dollar. It's just, if you're long, just be really careful. I actually took a little bit of a short in the euro dollar, just a small position. Like, it's Friday. I don't like to get too aggressive on Fridays typically. I'd rather, take small positions, take a little loss, make a little gain, and then, go play golf, which I'm scheduled to do later this afternoon anyway. So, and that's I'd rather have that kind of Friday than get myself all turned around and in a pickle, and then I'm having a really bad day, because my day gets progressively worse as I get on the golf course, and then I 3-putt my way around the golf course. Then I have a really, really bad day. So I don't want to put myself in that situation. I know a lot of you guys can feel that or could understand that. But anyway, so I think the risk is if we break through 122.60, this is where the downside opens up, is below there. That's when it starts to make people a little nervous, because again, I'm going to reiterate, I went to bed last night thinking, oh, the euro dollar is going to be trading at 124 when I get up. It's going to be trading up here. How many people actually took action yesterday looking at the euro dollar, the way it closed yesterday, right here, thinking, oh man, this is a nice bullish reversal, a little false breakdown over here. I'm going to get long because we're going to be up at 124 tomorrow morning. How many people got long based on that thesis? I'm sure a lot, so I'm sure the market went home long the euro yesterday, and they're looking at the euro dollar this morning going, oh crap. It's exactly what's happening right now, in my opinion. So again, I think the risk is that we break lower. Now, in order for that to happen, you got to look at the dollar index and go, well, that means the dollar index really needs to break higher here. And the dollar index is still trading quite heavy, and we can't even get above this dotted trend line. However, if we start breaking above yesterday's highs, which is 90 and a quarter, basically, and again, my trend lines are not perfect. I never said say they are, and I'm definitely open to adjusting things on the fly, because I know I'm not perfect by any stretch of the means, and as a technician, I know that we all have to make adjustments. So I think the trend line's right here, but hey, roughly, I think if we get above yesterday's highs, the dollar could squeeze, and we could start seeing that 91 level. And why is 91 so big? Why is it such a key level? Because that's previous support. That's the previous consolidation support was at 91. But I think a move up to 91, if we break yesterday's highs, is quite likely. Okay. Now, if you're going, okay, well, if the dollar rallies, where's that going to leave, the pound or the Kiwi or the Aussie or the Canadian? Well, every currency is going to be a little bit different, but the dollar yen, I'll tell you, is not in the same wheelhouse as other dollar pairs. I'm going to ask you guys this question. Why do you think the dollar yen could continue lower, even if the dollar index rallies today? I'm going to ask you this question, and I'm going to do it. I'm going to do it again slowly. And I'm looking at the Q&A panel so I can see your answers. If the dollar rallies, why or for what reason could it not translate into the dollar yen? The answers I'm getting is, for the most part, and Ziggy, you don't count. You read ForexAnalytix and analysis, so you don't count. So, but a lot of you guys are in stocks. Well, stocks could be a reason, but give me another reason. Benedict, you got it. For those of you guys, Ziggy's laughing. For those of you guys that were thinking the bond market, look, guys, take a look at the bond market this morning. Bonds are strong. Yields are falling. We just came out of a descending wedge in the bond market. Look at the boons. We had a rounded bottom in the boon. The boons are actually previous support, current resistance. We're breaking above after hitting 127% extension. Yields are falling. If yields fall, the dollar, yen, or other yen pairs could fall as well. This is a valid concern if you're long the dollar yen, which you shouldn't be, because I'm extremely bearish to the dollar yen, even though I'm not short at this moment. I think I've been in and out short the dollar yen at least 10 times this week, and I've made some really good money. Of course, if you use ForexAnalytix, I have a continuous bias of bearish in the US dollar Japanese yen, and I had for the last 2 weeks. But that's just because, we're in breakdown territory. I still think the US dollar Japanese yen can get smashed, even if the dollar strengthens elsewhere. That means the other yen pairs will get killed, right? Right. So you got the euro yen getting destroyed, pound yen getting destroyed, Aussie yen approaching channel support but getting destroyed, New Zealand yen destroyed, Canadian yen, big double top, destroyed. These are all all these yen pairs are all falling, and they're going to continue to fall if bonds rally, yields drop, and stocks fall too. All right, they all look bearish, all of them. Okay, now, all right, what the hell is going on? Whoever is trying to squawk on Bloomberg the speakers messed up. It sounds kind of funny. It sounds like crickets almost. Okay, so the cable had a crazy spike overnight. I have no idea what happened here, but Amanda in her chat room said it was a fat finger or something, maybe the fix or something, but some crazy moves in the pound. So this is a 5-minute chart. I mean, we sold off to 139, then rallied all the way back to 140. Crazy, right? I think so. It was pretty nuts. Anyway, so the pound saw a little bit of volatility. I think is one of the only things that actually was moving. Aussie's still trading pretty heavy, but very sideways. The Kiwi's trading heavy even after yesterday's retail sales numbers which were really strong. I'm trying to think how many hours ago back that was. That was like right here, and we still slumped. Oh, I can hear the Bloomberg. It's a lady. Her squawk must have been all screwed up this morning. Anyway, here's the US dollar Canadian. This is going to be this to me is going to be really important today. I'm game for buying the dollar Canadian above 127.50, so above yesterday's highs, because you have to imagine if we break yesterday's highs, we're going to 128 and change or 130. I mean, we're going up into this neighborhood. Let me grab my pen. We're going up into this neighborhood if we break out. If we break highs. So I don't even mind chasing it at this point on this dollar Canadian. Flip side is if we break back below like 126.25, we're going right back down here too. So yesterday's retail sales, they were weak, but it's not important. I mean, it's important, but it's not that important. What's really important right now and what everybody's attention is on is inflation globally. This is not a US phenomenon. We haven't just been looking at wage inflation, consumer inflation, the cost of goods. We're not the only ones. Around the globe, inflation is the hot topic point. So it's almost as important as like employment data right now. And if inflation fails to show up, that's going to really throw off a lot of central banks moving forward. And that's including the Fed. So if you look at let me delete that. If you go to, okay, here's Forex Factory. So here's Canadian CPI. Okay, now let's grab my pen again. So we missed last read in CPI. You can see we missed that. We beat that one. We came in light, inline, light. I mean, you're talking the last, 7 months, we've come in light on our read on CPI, more times than not. So, CPI is obviously, come in. Now we could probably should look at the trimmed CPI, but everybody's obviously looking at the headline number right now. So, CPI has come in a little weak. You know what? I don't need that. I'll just keep it over here. So CPI has been coming in a little weak, and if it comes in weaker than expected, I would not be surprised if we pull vault through the highs. Then again, taking into account what I was saying about the dollar, then the dollar's got a little bit of a tailwind. If the dollar starts picking up steam elsewhere, this dollar Canadian could go a lot higher today. And I posted a chart on Twitter yesterday, and a lot of people were tweeting me back, the top's in, and I'm like, I don't agree with that. I don't agree with that thesis. I think the dollar Canadian could be seeing 130 again. And remember, guys, the dollar has been beaten down with the ugly stick. Think about this. The dollar index has been beaten down with the ugly stick since January of 2017. We haven't even seen a short squeeze in the dollar yet. You haven't even seen one. You haven't even begun to see what a short squeeze looks like in the dollar. The dollar could be trading at 93, 94 in 3 weeks' time, and you're going to wonder what the hell happened, and then resume its downtrend. And it's going to, when you're in a strong trend, especially, let's talk a downtrend just because you've got one sitting in front of your face right now. When you're in a downtrend and you see a sharp short squeeze, they very much feel like, oh my God, the bottom is in, and it gets everybody bullish before it resumes its downtrend. They're very deceiving, especially when you're in a very bearish market. And in my opinion, the dollar index is in a very bearish market. But the squeezes that we could get from this bearish move could be quite rapid, strong, and deceiving, making it feel like, oh, a bottom's in. But look, I'm looking at the dollar index, and frankly, we have this, double bottom here. We clear that level, we could be trading right here, no problem. We could go whoop, whoop, really fast, and it'll freak everybody out. Okay, that's why I'm not too comfortable being short the dollar here. I'm not. I mean, I'm long the dollar right now at this very second, being short some euros, but I'm talking on a longer term scale point of view. All right. So anyway, we talked about the Canadian. I don't know if I'm trying to think of anything else here that I really wanted to discuss. I talked a little bit of bonds. I want to leave some of the crosses. For those of you that you use ForexAnalytix, only position I took home overnight was the pound yen, or pound New Zealand, excuse me. And if you read the analysis, you'll understand why. Okay. Yesterday, the pound New Zealand found the trend line support and bounce, which also may have created a small false breakdown. I think the bears need to be careful here for a possible move back to 192. We were trading at 190.15 when I picked it up. Okay, see that false breakdown right there? See the trend line support right through here? See that? All that trend line support. So I bought the pound New Zealand last night before I left the chat room. I'm like, hey guys, I'm going to take a small piece of the pound New Zealand long. It was after the New Zealand data, which was right here, by the way, this spike. I said, I'm going to take a little piece of this long. I bought it like right here after it came back down. And I sold it this morning at like 47, like right over here. So I'm already out, but that was the only thing that I was playing to the long side last night. Worked out fine. But if you use ForexAnalytix, you got to read through this analysis. I write all the analysis on the basic technical analysis during the week. Steve and I have kind of switched roles, so I'm doing all of the pairs throughout the course of the week at night, or at the end of the North American session. So if you guys use ForexAnalytix, make sure you read through this analysis, because I'm the one typing it out. And you should be reading it anyways, regardless if it's me or Steve or whoever from our team. You should be reading it, but because there's a lot of good clues in there. Okay, I heard Steve earlier. Stelios, I heard him as well. Good morning, guys.
Hello.
Hello. What's up, mate?
Hey, just gonna get ready for this Canadian CPI coming out here in a minute. What are you guys up to?
Not much, as you said. The markets were mostly boring yesterday, and so far the day doesn't look like it's about to produce much fireworks. But you never know. That's a good thing about the markets. They always have the ability to surprise you, right?
Yeah, I mean, I probably jinxed the market by writing you this morning. I said it looks like it's going to be a boring day today. Whenever I say things like that, we could have Black Friday, and then I'd be like, oh, of course. I thought it was going to be the slowest day of the week, and then the Dow drops 7,000 points on us. But I doubt that's going to happen. I'm being facetious there, but
that's what makes our job so interesting, right? You can never be sure in advance what's about to happen.
Exactly. And Stelios, I know you put together a good blog about the bond market. Hopefully you can get that out today, because we're seeing a little lift in the bond market.
Yes.
Yeah.
That's precisely what we're going to be talking about. But yeah, we'll do that.
All right. Well, I'm not
going to weekend reading.
Well, go ahead.
Yeah, no problem. I was
just
going to say maybe some a nice weekend reading for everybody.
Well, I'm not going to steal your thunder. I'm going to let you guys talk about it. I got to get ready for this Canadian CPI. So, hey, guys and gals, thanks for everybody listening in, at least to me, but make sure you stick around with Steve and Stelios, because they're going to be covering the Canadian CPI, and then also talking about the bond market, which I think is going to be a great conversation. So, Steve, I'm going to pass it over to you.
Okay, Blake. Thank you, mate. Grega
is
is likely going to be with us as well at some point a little bit later.
Great. So you guys will get a good Elliott wave perspective, which will be awesome. So, hey, TGIF, everyone, have a wonderful weekend. If I don't chat with you, and good luck, everybody.
Same to you, Blake. Same to you, mate.
Thanks, guys.
Okay, guys, I know that Blake started by mentioning the bonds, but if you remember, we had been monitoring them closely, and there is a very good reason for that. Obviously, the bond market, remains the biggest market out there, and it definitely has the ability to affect, anything, risk, effects, etc. And as Blake already showed, we had, the double development. We had three levels for confirmation that something is happening with the bonds. One of them was a break above this descending wedge. We got that. The other one was a break above this channel. We got that. And the third one was a daily close above 159.25, which, it looks likely that we might get it today. So I think, that's if we close the week above there, the day and the week above there, there's going to be a different way to view this, because many people will be talking about a false break lower, but regardless, I think that the market has the ability to really push higher from here and squeeze some positions. I mean, the next area of resistance is quite higher, I would say, at around 160.50 roughly. And if you notice, the treasuries have been underperforming the bonds. There's no question about it, but they're also attempting to break above an equivalent descending wedge. And this can really shape what we're going to see ahead in the markets. Regardless, let me switch back to the USD card, because we will have the Canadian data any second now. Stelio, please go ahead. As you see, the market, as obvious, has settled roughly at midpoint in expectation of it. So far, we have an inside spinning top today, exactly at the 200 EMA. We got rejected from that yesterday. But obviously, if we see some weak Canadian data, we have the ability to push above there and go to the next resistance zone, which is 127.80. I really believe that a weak CPI is going to more or less guarantee that we're going to test that area. It's also the 78.6 of the move lower we had from the highs, from the double top here. Let's see, data should be out any second now.
Yep. Dun, dun, dun.
We need some music for that, for sure, whenever we expect data.
Oh, it's strong.
Whoa,
It's stronger than
it's
expected.
strong.
Yeah.
It's strong. Yeah. Seeing the reaction, it's strong.
Yeah.
Seeing the reaction, it's strong.
CPI 0.7 month on month versus 0.4 expected.
Okay. Yep. But the year on year, from what I see, is as expected 1.7, right?
No expectation was 1.4. Last count was 1.9, but it was expected to drop more. So it's kind of dropped slightly less, but overall a little bit better. And I think the CAD is showing that.
Indeed, indeed. And this has the potential to end up being an evening star formation, but it's very, very early to be talking about that, because to be talking about the daily close, we need several hours ahead of us. Yeah, you're right. Stelio actual 1.7, expected 1.5, previous 1.9. The month-on-month 0.7 in comparison to 0.4 expected and minus 0.4, which was the previous print. So overall, yeah, much stronger data than expected. Core CPI year-on-year 1.5, when the previous one was 1.2, and month-on-month the core CPI was 0.5 positive versus minus 0.5, which was the previous one. So overall, yeah, CPI beat in all counts. Canada's 3-core CPI measure average 1.83 in January. Canadian Consumer Price Index is 0.9. Yeah, okay. So definitely that's going to be a headwind, at least temporarily for further appreciation. Let's see. The 200 DMA might prove to be the technical catalyst for a move lower, but I have to say that I'm a little bit skeptical. I first want to see how the day is going to end before we can discuss about anything else. We haven't hit yet the bull flag target, and we haven't reached the next area of resistance there at 127.80. So I think that we might see people trying to buy this dip. Anyhow, regardless. We will find out during the next few hours. I think that the daily close here is going to be quite important. It's going to be quite important because it's the end of the week. Many people will want to reassess their positions either at the end of the day or starting on Monday. I think if an evening star formation gets printed here on the 200 DMA, we will see people being a lot more cautious in buying USD CAD here. Otherwise, if the market manages to shake off, this sell-off in the USD CAD, we will definitely resume, to the upside in the short term, because we've said plenty of times that in the medium to long term we are looking for further weakness in the USD CAD. The question is from which level that is going to come. I'm not going to focus more on. I know that we had some questions yesterday that we didn't have the time to answer, and I'll gladly do so today, but let's have a very, very brief look at the majors. I have nothing to add to what Blake said about the euro. Euro USD is barely holding, but it is holding the ascending channel, and regardless, as long as we remain above 120.95, let's call it 121, we can't really turn bearish in the medium term. In the short term, of course, it has the ability to sell off somewhat more. Same deal here with cable. Cable is oscillating more or less in what can be either a triangle or a bear flag or a bull flag, sorry. As long as we remain above 136, same deal with the euro. I mean, in the short term, we can see further weakness, but the structure of the move lower really doesn't point to an intention for the pair to roll over and just accelerate. So the move looks, pretty much corrective, and I think you should respect that, even if we see the pair, dripping lower during the next few days or a couple of weeks. Now, having to do with the Aussie is still playing ball. We saw somewhat of a rebound yesterday. We're paring back the gains today. I think that 77.40 remains the next objective to the downside. Personally, I have no reason to be looking higher until proven otherwise. And now having to do with the Kiwi, finally, we got some real movement from the Kiwi. We managed to break below the 73.30 area yesterday, and that now opens the door for a retest of the 72.20 area. The 50 DMA is also there. This has been an area that has acted as support resistance several times in the recent and not so recent past. So I think that now that we actually managed to break below that area, more or less, I expect 72.20 to act as a magnet. Obviously, the Kiwi remains much better behaved than the Aussie, and it's quite more bid. So I would definitely need to see a break below that low to start believing that the downside for the Kiwi is more appealing. For the time being, I would obviously keep focusing on the Aussie as long as you're looking lower. Now, Blake mentioned the USD SEC, so I actually tweeted. I posted that yesterday on the chat room, and for me, if we even make an extension, a FIB extension, you'll see why I was looking higher. Okay, because we have the ability of that being like an ABC, and the zone I'm looking for is actually close to 826. Why? Because we have there the 61.8 of the last move lower. We also have there the 200 DMA, and the quality target for those two legs is a little bit lower at roughly 823. Okay, so this is an area I'm focusing on. Let me draw it actually. And I think that there is a good chance that we're going to see a reaction from there here. Okay, so this is the area I'm looking for, and if I see a reaction from there, I would be more than happy to actually be selling the USD SEC. Now, if we go to the USD NOK, because it's also a pair that we haven't really focused on the past few days, and for a good reason, because as you see, the price action has been rather choppy after we rebounded from a, I'm not going to call it a false break lower in the sense that personally I don't believe that this is going to cause a reversal, like a big reversal. I think that eventually we're going to push to new lows. So I don't think this is actually a false break lower. But anyhow, in the short term, you can even call it like that. We got a reaction from that, and now we seem to more or less be consolidating. The NOK remains rather strong in comparison to other pairs against the dollar. There is a good reason for that, and there is a good reason for that. By the way, I would before I switch out from there and use the NOK, let me say that I would be gladly selling the USD NOK once again. Ideally, I would want to do that higher. Okay, but I don't know if the market is going to give me that ability, simply because crude has behaving quite well. So we found a low at 58. I was looking to buy crude at 58, but I actually chickened out of it because the speed with which we found the area I was looking for was quite fast, and that actually had me not really convinced that so soon we found a low, because many times the market also needs to correct in time and not only in price. So that kept me away from buying 58. But the fact that the reaction we had higher found some selling, but immediately, as you see yesterday, we bounced and we pushed to new highs, tells me that the chances that this was a tradable low have been increasing. Obviously 63.36, which is the 61.8, it was also previous support, I think is gonna tell the story. So if we're looking for another leg lower in crude, I think that it shouldn't come higher from there. So above 63.50, I doubt that we're going to see another move lower before we get at least one more high above the previous high, which was almost at 67. So that's my view in crude. USD yen, I don't have much to say because Blake has been covering it, quite extensively. Nothing has changed. We got rejected once again. We remain below the absolutely no reason to switch from being bearish the USD yen. Okay, let me go to questions. And please, if you had any questions yesterday that we didn't have the time to address before the interview, this is your opportunity. Some of the questions are for Blake. 10-year yield. Yields rose and the USD JPY dropped. So why should it drop now when yields rise? That's a good question, Jason, actually. But you cannot count on the fact that a correlation that has broken and actually got reversed from what the standard is should remain broken forever, right? Because it's a well-established correlation. We have a friend here asking for the SPX. I also wrote about this yesterday in the chat room. Listen, there is a problem with being bearish the SPX at the moment, and the problem is the following. First of all, let me mark here. First of all, we've had 1, 2, 3, 4, let's call them negative days, and price has retraced almost nothing. So this price action doesn't look impulsive in any way. Actually, if you think about it, it looks like it wants to break higher. And another reason I'm saying this is because I didn't draw this area yesterday, right? I had it there like for a long time. Just look where we found support yesterday, right? So I'm not saying that you should be bullish because we might keep doing something like that, but I have to tell you that so far, the price action from the bounce highs, definitely doesn't point to another big sell-off lower. So I remain skeptical here. I mean, the market might have another push higher to get people believing that we're pushing to new highs and then sell off once again, because despite the fact that I'm viewing this as corrective so far, I remain of the opinion that the market is going to hold these highs for several days, perhaps weeks to come still. I don't think the market is ready to push to new highs, but it might be ready to push higher from where we are at the moment. Okay, so that's my view having to do with the SPX at the moment. Euro yen and pound yen. Sure, let's have a look at them. Okay, this is the euro yen, and there is a big problem with the euro yen here. The problem with the euro yen is that, let me also show you the weekly. This is one of the things that I showed in the chat room yesterday. Okay, big problem. First big problem is that we broke below. This is the weekly chart now. We broke below a horizontal resistance area, well-established horizontal resistance area that had acted a couple of times as a support. And at the same time, we also broke below an ascending wedge. Now, the second problem is that the euro yen is threatening another horizontal support resistance area as we speak. And if we actually break below that as well, things, you see the 200 DMA is also here. So let's say roughly if we break below 131 to give it some space, things start become, quite harder for the bulls. I think that if we break below 131, we should see 129 come rather fast from there. So, even if this is a corrective move lower, the fact that this was a, let's measure it actually. Roughly 26% move higher, you can easily understand that there is the potential for, quite a lot of a downside, right? Even if this move proves to be corrective to this 26% move higher. So, it doesn't look good. Doesn't look good. And if you want to be bullish, you really want to see this zone hold, because if we break below this zone, we're headed lower. Let's have a look at the pound yen. Okay, pound yen obviously looks somewhat better because, first of all, it's holding a major zone, which is the 147.50, 148 zone. We have also broken below an ascending wedge. You can see it here in red. But on the other hand, we are holding this ascending trend line. And at the same time, as I said, we're holding the 147.50, 148 zone, which also hosts the 200 EMA. Why is it so major? Because it was support here, and it has been a resistance several times. And after we broke above it, it has acted as support several times again. So the market has already determined that this is a major zone. That means two things. First of all, it means that there are a lot of stops residing here, right? So needless to say, you don't need to be extremely experienced. You don't need to be a rocket scientist to understand that if the market actually penetrates this area, only the fact that a lot of people that have been long have set this area as the area that they want to exit their trade should at least be good enough to accelerate the pair lower. So it's all about 148 here. Okay, as long as the pair is holding 148, fine. I mean, you can remain bullish. You have a good reward to risk ratio, and that's why we use stop losses in trading. But if we break below there, I would have to warn you that you'd rather either be short or not involved in the market. That's my viewpoint about it. Okay, let me see more questions. CAD Swiss, yeah, that's spelling. You mean bullish engulfing in last stage of ending diagonal? Also have a question for Grega. Elliott waves are based on emotions, fear, greed, etc. I added greed, but yeah. Do you think that Elliott wave will be less predictable as computers and programs are trading instead of humans? That's actually a good question. I doubt it will be, because I doubt that the market is ever going to be traded mainly by computers and programs. But let's hope that Greg is going to make it and be with us, and you can ask him that question. Let's have a look at the CAD Swiss. So I think I have it here. Yep, here it is. Okay, let's see. This is the last time we saw CAD Swiss. It's been some time. We were speaking for a possibility of an inverted head and shoulders formation, but we had said that for the market to hold this zone is extremely imperative, because that zone was support resistance zone, had the 200 EMA, etc., etc. So last time we saw this, we were seeing this corrective price action, and then we broke higher, and then we collapsed. So obviously, two things have happened. First of all, we've invalidated the inverted head and shoulder scenario. And second of all, I have to tell you that this move you don't need to be very experienced to realize that it's impulsive in nature, right? Just look at. Yes. Oh, there you go. There you go. Welcome, Grega. So, Grega, before you give us your opinion here, which I'm pretty sure that you also view this as impulsive, we had a very good question from our friend Robert. He asked, since Elliott waves are based on emotions, on human emotions and human psychology, do you think that Elliott wave will be less potent, less capable of predicting as computers and programs are doing more trading? He says, as they take over, personally, I don't believe that, especially big hedge funds and the big money will ever be solely left.
It's investors' psychology has impact on the markets because money is involved. So it's based on
exactly.
It's based on how much money you put in one side of a trade, for example. Okay, so even if robots will trading it, there will still be robots who will put money into the market. So there will
humans, you mean? Humans,
yes,
you mean?
so it's still, it will actually still be supply and demand. Some robots will sell, some robots will buy, and actually this will form a new structure and a new swings. So I don't think that market will just not work in such case.
And you know something, Grega, I just thought of something else as well. There is a very good chance that robots imitating past market behavior will actually be enhancing the reappearance of the same patterns. Because when you input data in a robot, what kind of data are you going to use? Historical data, correct? But historical data already embeds the way that human psychology was working in the markets. So if we consider that a lot of robots might be trading in a way fractals, right? Then in one sense, if you think about it, perhaps robots even make Elliott waves even more potent. So there is another side to the same coin.
The only difference between the robots and humans who make decisions where to buy or sell is that in such case, emotions are not involved. Only this is the difference, but still money is involved. And that's why I think, and which means supply demand is still there, which means it's still market, which means there will still be patterns.
Yeah, and as Ziggy says here, robots are programmed by humans, so they really just act faster on human thinking. And that's also a very good point, in essence. A very good point. And Summit is also saying robots making a market more technical, be it fractals, Elliott wave, fibs, can be seen in cryptos where majority of the larger market making is done by machines. He has a point there. And to be honest, you can I will pass you actually the screen. It's actually that's what I had been monitoring as well. And Blake had an amazing pattern in play. At least the two major cryptocurrencies that I've been monitoring, I mean, Bitcoin and Ethereum, have been extremely technical lately, right, Grega?
Yes, because even if I have received a lot of questions as well. If I think that that Elliott wave will work on crypto markets, etc., because it's some new financial markets, and it's simple answer. Even if it's other financial markets, even if it's structured differently than any market that we know that is regulated, still market psychology, investors' mood, who are involved in this market remains the same. Through history, psychology remains the same even if the market changes. So this is why Elliott wave is probably, as I know it, probably the best tool, because it's combination of technical analysis with investors' mood, with investor decisions, with investors' psychology. And that's why it's probably this tool, probably the best you can, the best thing that you can actually achieve, you can get from that. When you
let me also, Grega, officially, I mean, we've already said it, of course, congratulate you for winning the best buy side analyst. We're happy that both you and ForexAnalytix won in the equivalent categories, the FX Street Awards. I'm absolutely
for itself.
Yeah, I'm absolutely. So in essence, you won twice.
Yes.
You're the only person that won twice.
Yes.
Yeah. Okay. So tell me, what do you see at the moment as being the most clear markets in your mind? I mean, what strikes you as obvious at the moment by looking at the markets?
Here I have above, it's the 10-year US notes. What I'm looking at here, as you know, I was very bearish on 10-year US notes for the last 6 months or so. But what we can see in the recent phase is that actually bearish momentum is decreasing. And ideally, this is forming an ending diagonal. And it's not really a surprise if you consider that we are here in this fifth wave, which means that current bearish cycle could come to an end. So now the question is how this will impact the other markets. If we take a look on this in the middle, which is the S&P 500 futures, it's March contract. Actually, what we can see is that this S&P has been in a recovery mode since 10-year US notes were forming this decline in ending diagonal. Okay, so it suggests that we know that ending diagonal, the wedge pattern, it's a very powerful reversal pattern, and when volume picks up, strong move occurs, but normally in opposite direction. And normally this will take price back to the area of a former wave 4, which was here. And this spike also speaks for itself. It means, because it was a very strong reaction from there, it means it's definitely important level. So I would not be really surprised once we start to accelerating to the upside that we will go back to this level. So now the question is, how will this impact the stock market? Well, if we consider that this has been a recovery, okay, on US stocks, and if this market, 10-year US notes, will start to rise impulsively, then I think that this market could continue or turn to the downside. So what I would watch out is for a potential sell-off next week, maybe not impulsive sell-off, but definitely some kind of a lower price action here on the S&P 500 towards 2600 or so. And during this time, I think that yen could be very interesting for more gains, especially against like pound or something, because if I take a look on pound yen, as I know, pound yen is very, very weak. Just let me find
pound yen is flirting with a major level. I was showing it before. 148 is major for the market. If we see a breakdown below 147.50, 148, yeah.
The idea is actually that pound yen is already weak, or I should say yen strong against pound without S&P breaking to the downside. So if this will happen, then I think on stock market, then I think that this pound yen could really just continue to the downside next week towards 146, even lower. And in fact, this would then be a 5-wave decline away from this ending diagonal top formation that we called it.
Which makes that probably a major top, right? A tradable top.
Definitely. So it's already, we have an ending diagonal. This for itself is already a top evidence. And now another 5-wave decline would be just even stronger conviction that pound yen is going to the downside. Also, here, what I wanted to point out here, at the bottom, I have also chart of dollar index, okay? So now we made a correlation between 10-year US notes and the S&P 500, but here we have also dollar index. Notice that correlation, when you compare it with the S&P 500, is negative. Here was S&P 500 moving to the downside, dollar index recovered. Then we have seen S&P 500 recovered, dollar index moved to the downside. And when S&P 500 was slightly under pressure this week, actually sideways, dollar index has moved to the upside. So if stocks will turn to the downside, will continue lower, then I think there can be more upside coming on dollar index. I know that I'm actually tracking some kind of a bullish pattern on euro dollar. So I would leave euro dollar on the sideline, because if I see intermarket analysis suggesting that dollar could actually rise, then I will not play against strong currencies such as euro, which was one of the
euro, yeah.
17. So I will rather look at some commodity currencies. So wave count for itself, it's definitely much better there. So if we take a look, Aussie dollar,
I'm already short the Aussie dollar from 0.70. What is it? Let me check. So I'm not.
Yes, we also. I don't know if Blake is still in. I also shared PIP for clients.
78.75. That's my entry. 0.7875.
Yes. And I also shared PIP when we were here.
That was a great.
Yes, and actually I'm leaving this for much lower levels. So as I said, dollar could see more gains if we consider what S&P 500 can do, what 10-year US notes can do. Okay, so I will not play euro dollar longs or not even euro dollar shorts, even if I think the dollar could see more gains. But I will rather play Aussie dollar shorts, because Aussie for itself, it has a very clear bearish wave count. Impulsive drop, free wave rise. We know that when market makes a corrective recovery, this recovery should be fully retraced, which means we are looking back beneath 7759. So definitely I'm expecting more weakness here, but ideally this will not just reach 7759, but we will see a drop towards equality level. So I will take distance of wave A and project it. Equality level, here's the 61.8. Equality level is around 7.6. So
can you show me the bigger? Can you show me the bigger structure? Do you think that this is a big ABC? How do you use it?
Bigger structure is a little bit tricky. It can be only a temporary pullback as part of this ongoing ending diagonal, which means that another leg push to the upside could come here for a wave 5, or maybe if we will just continue sharply lower in this third leg of decline and maybe break beneath this red trendline support, then I will just switch this wave C to become wave 3, and then I will look much lower. So for the short term, actually, I don't care. We are short for wave C or for wave 3. Yes, but when it comes to trading, again, I always set risk reward based on minimum expectations. So my minimum expectations is wave C, but I always trying to leave my targets open. So now imagine if this will prove to be wave 3 rather than wave C. Then,
yeah, that's going to be awesome.
Yes, then of course, downside potential is much bigger. So when it comes to trading, I don't really care either if it's wave C or wave B. I will just adjust if needed when we reach and see how prices will respond at this trend line. So that's all what it matters at this stage. Okay, and Aussie, not Aussie dollar, even dollar CAD. I can take a look at this one also very quickly.
Yeah, we just have data about it.
Yes, and I have been bullish on dollar CAD for a while. You can see this arrow actually. And I have said that there is a bullish head and shoulders in play. Firstly, I thought that this wave 2 will finish earlier, but anyhow, it was a clear free wave pullback back for 50 or 61.8%. So perfect bounce has followed, and actually, if this is a wave 3, if we consider that this whole decline from November, better shown here on a daily chart, was just a temporary movement, then we know that there's more upside potential even towards this wave A equals to wave C level at 1.31. Okay, so there's more upside.
61.8 is somewhere there as well, if I remember right. Let me check.
Yes, I have it here on the chart.
The 61.8 is also there. Yeah.
This was just a big expanded flat correction with an extended wave C that stopped at last fib level 78.6, and since we turned very nicely to the upside, I think that this is also very interesting for more gains next week. Also, I can see a very nice interesting spike here. Now, this was an intraday chart that I was tracking earlier. So an ABC decline right into this yellow box. It was a perfect support, former wave for 50% retracement. So I think that really we could just continue higher, especially if we close at these levels, which means that bears were just temporary. And if we go even climb even higher, then this would be even stronger conviction that we are back on a bullish track and that this was just a temporary sell.
Very nice, very nice. So from what I see, we are also aligned, both Blake and I know you as well. We were looking for the dollar to find the bottom. Actually, we had multiple supports at the 88.50 area. The dollar more or less broke falsely below the 88.50 area there. I see that you're still looking, though, for another push to new lows. Personally, I told you last time you were here as well. Personally, I think that if we break above 91, the market is going to get squeezed. I mean, I don't see a likely scenario that we will manage to break above 91 and the market will manage to roll over from there. So we either all
91 is exactly the level which I would not say 91. I would probably more focus on 91, 50, and 92, because 91 maybe we can see a 20 pips, 30 pips spike higher, then turn to the downside. So actually 91 is pretty good resistance. Also 91 was, what was this spike here? here was exactly this. If we assume that this was a end of a wave 4, then you can see here 91. So actually all around this level, I think we should be very careful because
Greg, from an Elliott wave perspective, the fact that the last push lower was a false break lower and we actually did push to new lows, even incrementally, doesn't that theoretically satisfy that as a level, as a wave 5? So isn't it very likely that we did find a low there?
Yeah, I have this alternate scenario, but there are some guidelines which helps you to successfully predict the next move based on the Elliott wave structure. So what actually you should not ignore is the distance of wave 5. Normally, when you have an extended wave 3, wave 5, okay, would be similar to wave 1. This clearly was not the case. Also, when you see wave 5, you should see clear 5 subwaves within wave 5, which should normally break well below this wave 3 level. And clearly this did not happen. So if we consider that this did not happen, then we can ask ourselves what is going on there. Well, there you have then a flat formation. And a flat formation is just exactly what is happening now. A flat formation is a 3-3-5 pattern where each leg will typically form a fake breakout. Okay, so this is exactly why flat formations occur so often and work so very well, because a lot of traders will think that something has changed based on
and they will get trapped to the wrong direction.
Yes. So they say, okay, it was new low, that's the end. But you have to look at the substructure of this leg. You have to look how far this leg, this fifth wave went. If it's very small, if it was finished at the previous lows, then probably this more fits into a flat correction. Okay, so what I think and what I see is actually this was still, okay, so this is wave 3. If I do this as a wave 3 and this as a wave 4, okay, so this is a flat correction. And what is really interesting and what is probably the most important is that this is still a sideways move. Okay,
yeah, it is.
You must look at as a whole picture, not as just one piece of the puzzle. You must look at the whole picture. So this is still just a sideways price action. So I think that it can be seen as a corrective movement. And if we take a look on euro dollar, here's this sub that I'm tracking. Okay, and you can see that I said on a dollar index we have seen move down, potential wave B. Here on euro dollar, obviously move to the upside, also wave B then. And you can see that clearly this cannot be counted in 5 waves. Okay, you would, if you would label this as a wave 1, this as a wave 2, this as a wave 3, 4, 5. If I just give you a quick example, okay, it's not really the perfect structure because wave 4 is very small. Okay,
yeah.
3 legs within wave 1. So it's just with this wave count you would be forcing your bias. So
True.
If you want to try to respect what market is doing, and if you respect all of the guidelines that I just went through, then clearly you should label this and track this as a potential corrective movement within still ongoing uptrend to euro dollar and ongoing downtrend on dollar index. So that's why this is my primary outlook. And also you need to ask yourself, if euro dollar is rising for the last what 15 months
14 months, yeah, so 14 months, something like that already.
What is the greater probability that market has stopped here and we are going lower, or it's a greater probability that it will just continue to the upside?
Absolutely, you don't have to persuade me. I was at the beginning. At the beginning, I mean, at the bottom of the hour when I took over from Blake, one of the first things I said is that for me, the moves lower both in the Euro USD and cable look corrective to me. They really don't look impulsive in any way. I mean, if I had to do something, I would be buying them.
Yes. So that's why I said earlier. So if you see dollar that maybe based on intermarket analysis that I made just earlier. So if you see this situation then you would not trade euro dollar. I said to in the chat room that I would probably love to be shorting the euro dollar, but with this kind of a price action, with the possibility of a flat formation, I don't want to be in the euro if I think that somehow in the near term dollar could get stronger. I will rather look on opportunities against commodity currencies. But if dollar index will start to turn to the downside, if we will see even commodity currencies recovering, then I will switch to euro. So euro for now is just like my backup plan to know where to go if dollar will be pressured to the downside.
Very nice. Let me ask you something. We have a friend here, Martin. He says, hi, I would like to have Gregor's update on SPX. I see that he's still bearish in the last FA post. So I know that indirectly you mentioned it in comparison to the correlation with the DXY, but do you have a short-term count about what you see here? Because I have to tell you something. One of the things I also said is that the fact that since we found that high, that rebound high several days ago, that price action has been very slowly moving lower, tells me that the market might want to push one more time higher. And when I say higher, I don't mean higher than the previous high that we found, that I mean in the short term, it might want to push a little bit higher from what looks to be like a bull flag to me right now, before it actually rolls over.
Yes, I agree. Definitely, this is not very clear where we what is going on, and clearly, it's not really bearish yet at this stage. I would not be surprised if maybe this is going to be ABC, and this was just with X, and we are
and then an ABC,
more complex correction to the upside. So definitely, I think that there is a chance that we will see higher prices here, or just go into some more sideways complex correction. This was quite aggressive sell-off, so something more complex and tricky here should not surprise us.
Yeah, and you know something, because the markets have the ability to inflict maximum pain in maximum number of participants, I would really want to see like 2,800 print again, see some euphoria coming back. Oh, come on, it was just a one-time incident there because the VIX futures got blown off, etc. And, you know, it's a matter of days to push to new highs. And when everybody gets comfortable again that, you know, the market is has been restored back to bullish mode, then selling off once again.
Yes, when there we will be close to a new high.
Yeah, to the 78.6, for example, as you put there.
Yes, this is probably the most important fib level monotip pullbacks, definitely. So
yeah. Guys, if you're bullish Euro USD, does that mean it would be silly to go long bunds? Catherine is asking.
If we'll see long.
By the way, I have to tell you, Gregor, that I've been tracking the bunds since several days ago. I was tracking them initially as a descending wedge, and they have actually done very, very good. I mean, I think they look even they look even better than treasuries for a reversal. I don't know if I know that actually that you're tracking the bunds as well. So I don't know.
Actually, I do not track it so on a daily basis, but I have an eye on it definitely. What was the question?
So Catherine is asking, in essence, she's asking if we are bullish Euro USD, if that means that being long bond does not bode well with it. And you know,
the short term could see more downside on bonds. This is what she means.
Yeah, but you know, my comment there, Catherine, is the following: is that first of all, the correlations are not always perfect, which means that in the short term you might be seeing rate differentials decouple with Euro USD. For example, we saw that for a big period of time when Euro USD was still pushing to the lows. The rate differentials were actually pointing to much higher Euro USD rates, and we didn't have that for a big period of time. So one you have to take into account is that FX tracks very well rate differentials, but not on a daily basis. And the second thing you have to keep in mind is that the Euro USD, as obviously any FX pair, is a pair, which means that what bonds do don't matter in an isolated environment, because rate differentials come from what happens to bonds and what happens to treasuries at the same time. So, for example, depends on what treasuries do against the bonds. But coming back to my initial comment, you can even see rate differentials decouple with how the FX pair moves for several days, on occasion several weeks as well. So in my opinion and from my experience, and I'm pretty sure that Grega is of the same opinion because we've had conversations about correlations in the past.
Yes, but correlation here, I'm just looking at the chart.
Yeah.
Related one.
So let me finish this sentence. So what I wanted to say is that if you see a good technical pattern in bonds and a good technical pattern in the Euro USD, and you're not considering of trading it to the long term, I think that you should completely ignore, if it bodes well having to do with correlations, and you should trade both of them, and you might actually make it with both of them. I've seen that happen, right, Greg? I mean, sometimes you see something, a very clean setup in the market, but it conflicts somewhat with something else that you're watching, but they might both end up working in the short term, correct?
Yes, exactly. So actually, it's really important to analyze different markets to align before we decide something. That's why I always try to look at very different correlated markets all the time.
So you think we might have found a high, a wave 4 high here in the bonds?
I think that as I look here from the top, okay, let's say that here was a wave E finished of a bigger correction. Here was wave 2, and if I make this wave count more detailed, so here was first 5-wave fall for wave 1, then you have a wave 2 pullback, and then you have an extended 5-wave fall, which means 5 subwaves within wave 3, and now it appears that we are also here in a new corrective phase. So for now, this is still not a 5-wave movement to the upside, okay, or a clear, impulsive, strong reaction. So it's some kind of overlapping for now, so it can be correction. Actually, we are also here at this resistance area, and also I believe that we are here at this old swing lows, okay? So euro dollar at the same time is at the support, okay?
Okay, so you see the potential for another move to boost the new lows.
What I wanted to say is that correlation is here, is doing quite well negatively. So euro, you can see here clearly from this was what? So when Bund started to roll over, it was at the start of December. That's when euro dollar started to rise. I said also that I see euro dollar in a wave 4, so this can also be a wave 4 based on what we see. So maybe it's not a bad idea to find this market, to track it and look for potential resistance. But I would, as I said, for me, I would not trade bonds. Okay, I just see bonds suggest that there could be more upside coming for euro, and which means I will take a look still on general dollar movements based on sentiment. If we see dollar starting to fall, even against commodity currencies, as I said earlier, then I would switch to bullish pair with a bullish structure, which is euro dollar.
Which makes me understand that you remain quite bullish euro and pound crosses against commodity currencies, right? Which for a good reason, to be honest, because if you look at all of those charts, we have still kept printing higher lows all the way. So there is absolutely no reason not to be bullish. The euro Aussie, I mean, the euro Kiwi, the pound Aussie, the pound Kiwi.
Yes,
right?
Even euro Aussie, if euro Aussie, I think it has some very nice looking structure. I can look at the Euro Aussie. So so actually here we have a big flat correction.
Yeah,
as you can see.
It's clear as daylight that this price action is not bearish. Not bearish. Yeah.
So again, even if it's very similar actually to that dollar index. As I said, we have seen a spike to a new high, right? To a new low on dollar index when you have potential bottom. So here was also the same thing, new spike to a new high. So when you have just a small temporary move, that's probably, and then a strong reversal, that's probably an evidence that this move, this leg, is part of some bigger structure, especially if it's made by 3 waves. So again, you should not look for only one leg from here, one movement. You should rather focus on the whole price action from here. And you can clearly see, as this box, I help with this box a lot, you can clearly see that we are bounced from one side to the other. So it's a sideways move, and corrective patterns like a flat, it's a sideways pattern, which means it's a corrective pattern. And you can recognize correction very simply if you also make the similar box in the previous sharp reaction. Okay, so you can,
which makes it obvious that we ascended in price much faster. Yeah.
So if anything is impulsive here, then this was impulsive. If anything is corrective, then this is corrective. So next leg, you should be looking for moves to continue in the direction of a previous impulse, which was up, which means you would expect up. Also here, if you focus on these sub waves, you can probably count here 5 waves up.
5 waves.
Recent low. Okay,
very nice. Thank you very much, Greg. I really think that you put everything in perspective. It's always nice because with Elliott wave analysis, you can always do a top-down analysis and have a view from the long term to the short term. And I first of all, I'm always happy when I see that we are looking at the same side of the market, because I appreciate you and I know how skilled you are. So you always put things in perspective. So thank you very much for coming. It's always nice having you near the end of the week, because it also puts everything in perspective ahead of the upcoming week. You being here on Thursday or Friday, and Blake doing the week ahead video every Sunday. I think it's the best preparation for the upcoming week for our listeners. And thank you very much, mate. And congratulations once again for winning the FX Street Best Buy Channel.
Same to you, and good weekend to all of listeners.
Okay, all of you guys and gals, thank you very much for being here for one more week. As we've said in the very beginning, Dale is a little bit sick, so he couldn't make it today, but our thoughts are with him. It's nothing much. He has the flu, so don't worry about it. And we'll see you again on Monday. Okay, enjoy. TGIF.